Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Jurrien Timmer is definitive at Fidelity without question. Look on LinkedIn. It's the best place to see this. The absolute smartest combination of economics and finance into charts, into technical analysis. And it's so good. I'm going to put this up for YouTube. I took a screen grab of my most important chart of the second quarter. It's, of course, from Mr. Timmer of Fidelity. Jurrien, it's real simple. Use of cash, earnings $225. I got a linear growth in dividends, $75, and I got $90 in share buyback. Corporations are generating 73% payout on those earnings of $225. Does that continue?
Yeah, and this is the reason why the U.S. trades at a premium to most of the rest of the world, because the share buyback culture is somewhat unique. I mean, it happens in other places, but the payout of 73%, which is actually below where it has been over the past decade or so, was closer to 90%. But if you think about it from a DCF, discounted cash flow model perspective, if you're a shareholder and you're getting more of the company's earnings returned to you in one way or the other, that commands a higher premium, right? And so that's why the U.S. has traded, more expensive, I guess, but it's well earned. And if the big free cash flow generators continue to generate that cash flow, then I suspect it will continue.
So there's this dovetail with Michael Mobison's work, which what's more important now is the annual payout along the continuum rather than the terminal rate insanity we were lectured on in school. Is the actual yearly payout that you describe more important than some phony calculation of terminal value?
Well, you're getting into the weeds of the DCF model, which is both so elegant and frustrating at the same time, because there are so many variables, right? You have earnings growth, you have the payout, you have the risk-free rate, and you have the equity risk premium. And it's elegant because you can explain the market through every variable, including sentiment, which I think the risk premium is a reflection of. But you also can never solve for four variables at once, and that makes it frustrating. So you have to isolate something. So the terminal rate versus the next 5 years growth, I just assume that it's going to be 6%. The terminal rate is the 10-year Treasury yield, and then I solve for the risk premium because you have to isolate something.
Paul, I was in Boston near the State House, a lovely ornate 17th century State House, whatever, the red brick building there. And some guy next to me is going on DCF. Peter Lynch threw a snowball at him. He was so angry.
So, Jurrien, I mean, I know a lot of companies, when they come through Boston, they come into the Fidelity offices to meet with you guys. When you're talking about use of cash, how do you, and I'm sure a lot of these companies say, hey, what would you like to see, dividends or buybacks, or what kind of mix? How do you answer that question for these companies?
Well, that's a good question. I guess it depends. I mean, dividends are sort of, like a sacred commitment, right? So if you're going to pay a dividend, you better not take it away. And buybacks are more variable, right? If you have the cash flow, buy back the share. Then the question is, do you buy back shares or do you spend it on CapEx? And actually, it's interesting that the CapEx as a percent of revenues has been increasing, and maybe that's part of the whole AI boom. But that's obviously good to see. But it comes down to the productive use of your cash, and if you're generating so much cash that even after satisfying CapEx, it's just sitting on your balance sheet, well, then you might as well return it to shareholders because that is part of the math.
How about for our good friends in Cupertino, Tim Cook, Apple? They pay just a token dividend. We've seen Meta initiate a token dividend. What do you say to the technology companies when they come through your offices about, okay, thank you for the gajillion-dollar buyback, but would a 3% dividend yield kill you? I mean, do you have those conversations with the big tech companies?
I think for the growthier companies, I think generally they have paid less in dividends than, for instance, a bank or a consumer staple, and I think that's just part of the structure of different sectors. And so, as long as it comes back, again, if the cash is used for a productive purpose, capex, whatever, R&D, then that's fine. If it's not used, whether it comes back as a dividend or as a buyback, I guess ultimately it doesn't matter too much. Probably a dividend would command a higher premium because it's less likely to go away. But for growth companies, I don't think it's generally expected.
Jurrien, a technical question, folks. Inside baseball here. Come with us. It's a global Wall Street question. Jurrien Timmer, the return on invested capital of Nvidia is 54%. The EVA spread, we're not going to go into the details now, is a mind-blowing 42%. If they migrate to trend, can their stock hold up?
That is a good question. You get into that super growthy space, and you start looking at not just the second derivatives, but the third derivatives, and so that's always a tough question. It depends on, how crowded the space is, what the valuations are. One thing I'll tell you is that, I've looked at this concept of the Nifty 50, and of course we're down to the Mag 7, but generally speaking, the Nifty 50, I've studied that very carefully, going back to the early 70s, which was the original Nifty 50. And when you see periods of these big growth companies really dominating, as we did in the early 70s and the late 90s, at the end of the day, those companies traded at a 2x multiple to the rest of the market. And today, the top 50 are trading only at about a 30% multiple. Okay. So maybe there's still some room to go because most of their performance has been justified by earnings.
Just great. Jurrien Timmer, thank you so much for Fidelity. We're going to take a measured conversation right now with Mr. Ives. Dan Ives is a pinata. He's senior equity pinata at Wedbush Securities. Everybody loves to hate him, and my problem is if I have a look at if I don't look at a daily chart or an every 15 minutes chart like Scott looks at over at the Death Star. Dan Ives, I'm looking at a monthly chart of Apple, and it is beyond elegant, bouncing off my long-term moving average at 166. It's up 16% in the last X number of days and weeks. First of all, Dan Ives, why is Apple up 16%?
Because investors are anticipating not just what's going to happen at WWDC, where they're going to release Cook and Cupertino, the AI strategy. But if you look at numbers coming out of our Asia checks and others, you're seeing a stabilization of iPhone demand. And I think a renaissance of growth is now on the horizon for Apple.
Okay, I don't want to do a fanboy thing here, Dan Ives, but I'm absolutely blown away by the resolution from the M4 chip over to the fancy iPads. Wow. Are they going to cannibalize other Apple products, or are they going to stand on their own?
I think it stands on its own. Look, I mean, you've talked about this a lot. The chips, they beat Intel at their own game. And I think now you'll have a legit refresh on iPads, but it shows the power of those chips. And the important thing is that those chips, too, they're going to be able to ultimately navigate and deploy AI features within the broader Cupertino ecosystem. And that's why most are going to access AI in the future through an Apple device.
Hey, Dan, as Tom mentioned, this Apple's up 16% over the last period of time here, the last several days and weeks. What's the call on China these days? How's the market viewing the China, I'm going to call it a risk for Apple? How's the market digesting and discounting it?
Yeah, Paul, I think it went from a huge risk to what we've seen, especially our checks in Taiwan this week, stabilization to an uptick. So I think what's starting that market's starting to sniff out not just a stabilization, but an uptick in China. And at that point, I mean that's Cook drinking a mimosa, because then you now start to see an upgrade cycle take place with the biggest event we've seen in a decade, with AI coming to Apple.
All right, so June, this developer conference, what should the market expect here? What do you think is going to happen there?
So I think, look, some are fearing it will be a hype event. I strongly disagree. I think this is the start of essentially what's going to be AI to developers. So it's really the start of a new AI app store from a services perspective. And I think the features that they're going to build in,
Right.
not just their own, but OpenAI that they'll ultimately introduce, I think that's a partnership
Right.
that's going to be exclusive and important.
One more Apple question. I really want to go financial, but I'm going to stay on the fanboy stuff. Dan Ives, what am I actually going to do with AI with Apple? If I've got the iPad and the Pencil Pro and I'm Mr. Artsy Fartsy, what's AI going to do for me where I look like I'm not making Popeye as a comic strip?
Well, first off, I think the big thing, especially with OpenAI and some of these LLM features, Apple is really trying to get you to almost bypass things like Google and some of the traditional search. But I think the biggest thing is just the features that you're going to see come out on healthcare, on consumer apps, on generative AI. It's all going to be apps. Developers are going to be building generative AI driven apps on the iOS foundation. And that's the key. In the future, it's all going to be mostly through Apple devices. But that's what Microsoft's fighting this week. They want a piece of that from a consumer perspective.
And now the obligatory Nvidia questions, Paul Sweeney.
So Dan, I mean, Tom Keene's all about AI here. What should he be looking for tomorrow afternoon when Nvidia reports?
Oh, I think get the popcorn ready, get all set. Your favorite, beverage when they report. Because when the godfather of AI, Jensen, and NVIDIA report, I think it's going to be another jaw dropper in terms of the demand that we're seeing. It's not slowing down. And I think we're just starting to see this acceleration. And that's important for the second, third, fourth derivatives within tech, which is why we believe this tech bull market has significant legs from here. But it all starts with godfather of AI, Jensen, tomorrow. I'm expecting another just drop the mic.
Yeah, I mean, he's going all existential on us with the third and fourth derivative as well. Where does Apple fit into the derivatives? I mean, they're not first or second derivative, are they? They're a follow-on from all these other people, right?
I think they're second, third derivative. Because when we talk about NVIDIA, Microsoft, Google, ServiceNow, that's enterprise.
Right.
But on the consumer side, the chips and the actual use cases, how are they coming to the consumer? It's Meta, Google, but most importantly, it's Apple. And that's why now this is ready for prime time starting next month at WWDC. That's where the unveil starts. And eventually the iPhone 16 that will have their own AI features built in.
Hey, Dan, who goes to this? I mean, can Tom Keene get a ticket to this
I don't
developer
have a black
conference at
turtleneck.
Apple?
You can't go unless you have a black turtleneck.
Well, for Keene could get a ticket anywhere.
Yep.
So he's like, you almost have to exclude him. I mean, he's one of those exclusive, Monaco guy. But for the average, this is really for developers.
Yep.
It's for industry folks. That's really the focus of WWDC. What we'll be at.
What are you doing with your $250 price target? You're an outlier, but seriously, Dan Ives, some of the parts are earnings momentum as they come off the mat, up 16%. Are you ready to adjust that up so we can make some news this morning?
Look, 250's base case. I believe AI will add $30 to $40 per share to this Apple story over the coming years, and that's why I think $4 trillion will be what we'll be talking about in Apple a year.
Go first derivative. What's it do to Microsoft?
Oh, I mean, I think Microsoft, they're right now in the leader seat from an enterprise perspective. I mean, if the Mount Rushmore of AI. It's Jensen. They're carving that out. Who's next to it? It's Nadella.
Can you see Mount Rushmore?
Yeah.
Jensen,
Right.
Dan Ives,
Oh,
Ed
totally.
Ludlow,
Exactly.
and
Ed Ludlow.
Satya.
Right.
I mean, it would be too much.
That would be too much.
Dan Ives, I could just see you on Mount Rushmore. Thank you so much. With Wedbush, you can send your hate mail to Mr. Ives directly, or I get the hate mail too. If you have love notes for Dan Ives, they go through Lisa Mateo. Mr. Ives is with Wedbush. He is enthusiastic on America's technology. Darkening the door of commerce. A number of years ago, an academic from the Upper East Side at the Council on Foreign Relations, Elizabeth Economy, went down to assist the governor of Rhode Island with Commerce Forward. Elizabeth Economy joins us right now. She's free from the clutches of our public service. What was the first day like at Commerce? Did they put a cork in your mouth and just say, be nice? What was the first day like?
I don't think they knew what to expect.
Yeah, exactly.
But honestly, there were only about 50 people working there at the time because it was right in the middle of the pandemic.
Yeah.
And the only people that were showing up for work were the secretary's kind of immediate 20 to 30 people on the 5th floor. So it was like a ghost town, but it was a great, great opportunity, and she's just fantastic.
And just to remind people, Elizabeth Economy, years ago out of Michigan, with The River Runs Black, it was just a profoundly changing book on China's pollution right now, and a whole series of books along the way. I want to go to your foreign affairs blistering essay, and without going into the details within the confines of the length of this interview, what should the U.S. do? Are you allowed to say this now, or are you like in a timeout chair for 6 months after leaving?
No restrictions.
What should we
no restrictions on
How
me now.
do we respond to your blistering essay of China's plan?
I think the point that I was really trying to make in the piece was that the United States has done a really good job of responding in the first couple of years of the administration to the immediate challenge that China poses. But now we really need to expand to the global stage and pay attention to how China, through its Belt and Road Initiative, through its Global Civilization Initiative, its Security Initiative, its Development Initiative, all of these things are designed to transform the international system in ways that are antithetical to the U.S. And so that necessitates a new strategy, a kind of second-tier strategy from the United States, which is much more than simply focusing on our European and our Asian allies, but really expanding our tent to include emerging economies in Latin America and Africa and Southeast Asia, and bringing them into an American vision of the world for the 21st century.
I guess I grew up on global Wall Street, where globalization was the thing. That was my career. With China, should we try to engage with China? Should that be our first order of business, to try to engage with China? Or should we step back and say, this is almost like, I don't know, the Soviet Union from back in the day? I mean, how should we engage with Chinese?
So I think for 35 years, we had 90% engagement, 10% competition.
Yep.
Right? Now we're basically at 90% competition and 10% engagement. I think actually, unfortunately, we've got it about right at this point. Okay. I think we need to understand that China's not interested in the kind of engagement that we've pursued for 30-some years. They have their own vision. They want their own norms, their own values, their own interests reflected on the global stage.
Your book, The Third Revolution, was my book of the summer. It seems ages ago, pandemic ago as well. In it, you were really controversial about the power that President Xi has in China. Has he solidified his power? Is he impregnable now?
I don't know whether anyone is impregnable. Certainly he's done an amazing job of bringing institutional power into his own hands. What we don't know is, how much his personal power actually radiates through society. What is the real legitimacy of Xi Jinping among the Chinese people? We have some polls, for example, that show that urban Chinese would really like to have greater freedom of speech. They'd really like, greater property rights, the right to assemble. I think you can look and see a lot of dissatisfaction in the country if you look beneath the surface. We don't have 180,000 protests on the streets the way we used to, because Xi Jinping has put in place this incredible repressive apparatus. But that's not to say discontent is not still there.
The heart of the matter, and folks, I attended the Council on Foreign Relations, where I'm a member of a very important conference by Gina Raimondo. I've got a business, Paul, as you mentioned, a business globalization structure debating China. And I've got a president of the United States worried about 4 swing states, so he's anti-China. And the candidate for the Republican Party, I believe, is anti-China as well. Are we able to have a cogent discussion on China now? Are we literally back to Chiang Kai-shek and the ballet post-World War II?
I think that we're able to have a cogent discussion, but the parameters have shifted so that there's a new realization about the real challenge that China presents. I think we don't want to sort of go down the rabbit hole where everything is about competition. We need to do what the Biden administration started out to do, which is to look for areas of common ground and common purpose, to try to find communication channels on the military to military cooperation. We don't want this relationship to devolve into kinetic conflict. But it's also true that we recognize we can't continue that globalization without any protection for the American economy. You can argue whether we're swinging too far in one way. You can argue whether or not we actually have been very clear about what we're doing in terms of our economic strategy on the grounds of national security or economic competitiveness. I think we can do a better job there.
I'm running out of time. Can you make this a weekly appointment? Come on. Elizabeth economy, we've deployed 4 military bases in a new military effort from the northern Philippines down to somewhere in the vicinity of Indonesia. We've got to build out in Australia, et cetera, et cetera, et cetera. Is the Pentagon going to be our State Department to China in the next 5 years?
No, I think the Commerce Department has been our State Department to China.
Is such a homer.
And good thing, too, because the Secretary is really the star. No, I mean, I think our economic strategy has...
Rich, is she still working for the government or not? Did I not get the memo?
No, I think again, we've enacted so many different kinds of new economic policies that have a pretty significant impact on China. I think that has been our first foot forward. But it's also true that if we're looking at issues like Taiwan, or as you're suggesting, the Philippines and the South China Sea, the military has to be front and center.
How alone is Nick Burns over there? A good friend of the show, Nicholas Burns out of Wellesley, and all of his public service as well. Is our State Department alone in Beijing?
No. I think he's done an amazing job of engaging, frankly, with our other ambassadors from our allies and partners. So he's got a lot of support, a lot of friends. I think in the earlier days of the pandemic, it was extremely difficult, but he's been an amazing ambassador.
Lisa wants to know, I mean, do you really think that high school kids now should pick up Mandarin as a third language? I mean,
absolutely.
Absolutely.
We need the next generation of China scholars and China policymakers. We need people to be informed about this country. It's 1.3 some billion people, the second, largest economy, largest military. Why do we not want to be expert and
Everybody
informed?
wants to know, when's the new book? What are you doing here? You're slacking off 6 hours a day. When's
I know,
the new
really,
book?
right?
Come on.
The polarized polity, looking at polarization in China, arguing that it's easily as
in
polarized.
Domestic China.
Easily as polarized as the United States, and implications for China's future economic growth.
What's her name? Is Scarlett Johansson? How do you pronounce her name? Johansson. Johansson.
I don't think she's going to be
sell the movie rights?
I don't think she's going to be starring as Xi Jinping anytime soon.
When does this tome come out?
Let's call it 2.5 years.
2.5 years from now, great. Elizabeth Economy, do not be a stranger. Her public service to the nation at Commerce, now ensconced at the Council on Foreign Relations, definitive on China. Look for her writings. I can't say enough about her first effort for Foreign Affairs magazine. Look for that. It's a blistering essay, a to-do list for America with China. Your daily look at the front pages around the world, a foundation to what we do here, including our newspaper segment. I glanced at least. This is a great lineup you got today. Where do you start?
Yeah, we're starting. This is an interesting article on the Terminal. You can check it out for yourself. Florida being hit by this surge in commercial property insurance bills. And because of that, it's causing a major issue there. I'll get to that in a second. I want to break down the numbers, though. In the 5-year period ending 2023, costs surged 125%. Last year, premiums soared 27% for the second year in a row. So because of that, more nursing homes, they're starting to close down each year. The cost of senior care is starting to rise. Two things are happening. So you have climate change, you have more, hurricanes, stronger hurricanes, and then you have the challenge of caring for an elderly growing population. So you have those things starting to collide together, and now because of that, there's this issue. Where are the elderly going to live? because they all like, to go down to Florida for the warmer weather, lower taxes.
That was years ago. Do they want to go down there now? I don't know because, what I've seen is a couple good articles. I'll give the Wall Street Journal a shout out on this, on the exodus of middle-class people from Florida. They're going up to Georgia, North Carolina,
The Low Country,
Wake
that
Forest,
is beautiful. Yeah. With Florida being threatened by more powerful hurricanes, commercial property insurance costs last year surged at nearly 5 times the national pace. That's a problem.
It's a problem.
Okay.
And if these retirement homes keep closing down.
I mean, Florida, they can't take all these people that have been coming down. I would think they'd have issues with schools or housing or resources, water.
I mean, somebody in the last 24 hours in the Zeitgeist had a whole thing on Coral Gables.
Yeah.
I mean, I looked seriously at Coral Gables about 7 years ago. It was really, I just didn't want to get out of the triple leveraged all cash fund. But the answer is Florida isn't Miami. Florida isn't just Coral Gables and hedge funds and, all the other fans. The life of Mike McGlone.
Mike McGlone, exactly.
It's not just, there's a whole nother Florida.
Well, the thing is, it's hard to find a place. My mom's in Naples, and when she had to move places from one retirement community to another, it was hard to, you're on waiting lists. I mean, it's hard to find a place.
Yep.
So, with more closing down, not so good.
Hey, Lisa,
You're staying in Jersey?
I'm staying in Jersey.
You're staying on the shore.
Yeah, exactly.
Okay.
Next.
The highest paid CEOs of 2023. Okay, this is from the Wall Street Journal. They did an analysis, more than 400 companies from MyLog IQ. Okay, so they found that half of the executives made at least $15.7 million. That's a record for this survey. Several making about more than $50 million. The highest paid S&P 500 CEO in 2023 goes to Broadcom's Hock Tan, who made $162 million. There are certain stipulations, though. He has to stay in the job for 5 years, and Broadcom's share price has to reach certain targets after 2025 of October to get that full value. Then he was followed down by Palo Alto Networks' Nikesh Arora, and third, Blackstone's Stephen Schwarzman.
Every single year he's there, Stephen
Schwarzman.
Is it appropriate to put equitized risk into compensation studies?
Tom, the scam, however you want to phrase it, the structures are basically stock-based compensation. It sounds good to shareholders. It's based upon metrics that can be, managed, whether it's cash flow, free cash flow, earnings, whatever. You can run your business to reach those metrics. To achieve those hurdles to achieve your stock-based at-risk compensation,
right.
And that's what corporate America and the boards and shareholders, quite frankly, have basically signed on to, and that's kind of where we are.
Those stock awards are growing their compensation packages. I'll tell you. This one you heard it come out. Scarlett Johansson.
I'm a huge Scarlett Johansson.
Me too.
Fan. Yeah.
Yes.
I think maybe for different reasons.
Okay, I got you on that one. She has lawyered up. She's fighting back against OpenAI for a voice that she says sounds like hers. So the backstory is in September, she got an offer from OpenAI Sam Altman to be the voice of this audio feature for the ChatGPT, but she decided to pass on it. But then last week, OpenAI released these new tools that included this voice called Sky, and she says it sounded just like hers. Altman saying the voice is not hers. It was not intended to sound like her. They had a voice actor before even approaching her. OpenAI did take down that voice. It's called Sky, replaced it with another voice called Juniper. But you see this.
So
it's this
they
battle.
replaced what she believes is her voice.
Yes, but the point is the battle that the strikes were behind it too. AI fighting these deep fakes. A lot
How many
of Hollywood
lawyers
actors
will be employed for the next 5 years?
Oh my goodness,
that's true.
And looking at
It's
the Bloomberg reporting here, that Johnson has waded into legal issues in Hollywood before. In 2021, the actress sued Walt Disney, claiming the entertainment company broke its promise to release her latest film, Black Widow, only in movie theaters when it made available for streaming. So
and good for her for doing
stay
that.
on top of it.
I haven't said this publicly, but OpenAI got in touch with me about 8 months ago, and they said, we'll pay you not to use your voice.
I was like, they're going to use your voice. Oh, I'm kidding.
No, they said it's so bad,
Aww.
we'll pay you to go away. Thank you, OpenAI, for that. What do you got next?
Last one, Red Lobster. We told you it was filing for bankruptcy, right? But now everyone is flushing in. They want to get their last meals there, even take home a piece of nostalgia, some of the history from there. That $20 all-you-can-eat shrimp deal in June, it really killed him. But people love the affordable price for seafood that they can get there. And that's why people keep going back. They say they like the nostalgia. They had, family parties, birthday parties.
Yep.
And actually, Elon Musk did tweet that he was unhappy when he found out that they were filing for bankruptcy. He said, "Too bad, I have some fond memories from a long time ago eating at Red Lobster." So people have been trying to buy certain things when those stores close out, like some of the kitchen stuff. They want to buy the lobster tanks. So they want like a piece of the history because they say it's been part of their lives.
Why did they go under because they were giving away shrimp? Come on, that's just too simplistic.
No. It had a lot more to do with it.
I think it was underlying real estate costs and labor costs and so on and so forth. But I mean, and then just people, I think their demographic has been kind of pinched a little bit at the margin. So
it did, but that was an $11 million loss for them, that
for the
$20 shrimp thing.
Lisa Mateo, thank you so much with our newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.